What are you seeing in these markets as we see the Chinese data and inflation fears taking their toll?
Well, we're starting a new week off on the back foot, Anna, and that was evident in Asia. If you look at the GMM function on the Bloomberg terminal, you see a lot of red. It was broadly a down day for bonds, as Anna alluded to. Most currencies in Asia also weaker against the dollar, and it was a bit more of a mixed picture for equities, but the big underperformance from a stock perspective came from China after that GDP data. Growth slowing to 4.9%. Yes, that was largely expected, but still it shows that the power crunch, the property sector crisis really is taking a toll on Chinese growth. And so the Chinese CSI 300 did fall about 1.2% in the Asian session. Interestingly, the biggest sector underperformer within that was consumer staples. And that was on a separate piece of news that Xi Jinping is looking to expand the consumption tax. So that's took the staples index down about 5%. I would note that the Chinese yuan is essentially flat against the U.S. dollar after that data. But the real action was in bonds. New Zealand posting its highest inflation, fastest pace of inflation in 10 years. As a result, its 5-year bond was up 20 basis points to above 2%. Well, in Australia, the 5-year yield there was up 16 basis points. You are seeing a lot of selling in the belly of the curve, and that is true really across the world. Speaking of other parts of the world, here in the U.S., the S&P 500 is coming off of its best week since July. This morning, though, futures are in negative territory on S&P E-minis. We're down about 1/3%. The bond sell-off is continuing here stateside as well. The 10-year yield is up 3 basis points. We're north of 160 once again. And I would point to oil as well. We are coming off the 8th consecutive weekly gain for oil. And once again, WTI is up about 1 percentage point this morning at $83 a barrel at its highest, going all the way back to October 2014. And then have to note Bitcoin as well. We did see some selling over the weekend, Matt, but this morning up the better part of 4%. Just under $62,000 as we await potentially a Bitcoin futures ETF approval that could start trading today.
Yeah, and it's been a long time coming, Kaylee. I mean, we've been waiting for a Bitcoin ETF really since I started covering the asset over a decade ago. So it'll be very interesting to see if we get that. In terms of the markets, there is no shortage of excitement. You can see that we're down across the board. So the equity indexes are all selling off. For the most part, Portugal showing some gains. You can see some gains there in Austria as well. But it's really the rates picture that's amazing. You showed your GMM, Kaylee. When I pulled up my GMM in Europe, black boxes all the way down the sovereign yields column. And those black boxes mean that yields are moving more than 3 standard deviations away from their 30-day average. So a real sell-off in rates, especially at the front end of the curve. You can see here I've got the UK 2-year, the French 2-year, the German 2-year, all jumping in yield as investors sell off that debt, expecting higher rates. Anna, it's very interesting now to pay attention to what people like Bailey and Lagarde have to say, what people like Visco and Knott have to say. I mean, everywhere you look in markets, people are going to be trying to make bets on whether or not rates are going to rise.
Yeah, absolutely. The UK market certainly reacting to those comments from Andrew Bailey over the weekend. We'll get to those shortly. And the New Zealand inflation data that Kaylee pointed to, certainly touching a nerve for markets that are already nervous about inflation and higher rates. Who benefits from that, though? Bank stocks. Bank stocks, the biggest gaining sector here in Europe this morning, worth a note. Now a look at what is ahead for us this week. Another busy week in store. EU leaders will discuss the energy crisis and measures to blunt its impact on the economy at a summit taking place in Brussels this week. Apple will finally unveil its redesigned MacBook Pro today, the first revamp in 5 years. I know Kaylee is watching that intensely. She'll bring us details later. On Tuesday, Netflix will report its third quarter results. The company estimates Squid Game will create almost $900 million in value. I'm sure if we run a text search, we'll find as many mentions of Squid Game as stagflation. I'm sure they're maybe running neck and neck. Now on Wednesday, analysts expect Tesla to turn in its 10th consecutive profitable earnings period. That stock doing well pre-market, I understand. And Barclays, Nordea Bank and Swedbank kick off bank earnings season in Europe. That's on Thursday. We're mindful, of course, of this rising yield environment, what that is doing to European banks right now. Now let's get back to one of our top stories around China. China's housing slump and electricity shortages dragged down economic growth last quarter. There are signs there will be more pain to come as the country heads into winter and property curbs remain. Let's get more then with Bloomberg's chief Asia economics correspondent, Enda Curran, who's with us this morning. Enda, good morning to you. Somebody put it to me again this morning. Our Markets Live colleague Mark Cudmore said this data was bad, but not bad enough that the central bank springs into action. So from a markets perspective, a risk asset perspective, that's kind of the worst of both worlds. How did you view it?
Well, definitely a double squeeze on the economy. We know what's going on in the real estate side of things. The EVERGRANDE story there is forcing regulators to try and rein in risk, rein in prices in real estate. That's about a quarter of the economy being impacted. On the other side, we have this energy crunch. China's trying to hit emissions targets. Some factories have been told to curb production in order to save energy. When you add it all together, we came out with a pretty kind of negative August-September period, which brought down GDP for the quarter to below 5%. Now, there was some upside surprise in retail sales, stronger than expected. We know exports are still going gangbusters, but the bigger story is, as you say, the economy does need more support heading into the end of the year. The question is, will the central bank step in, and what kind of support will it offer?
Well, let's talk more about the central bank, and specifically as it relates to Evergrande. The PBOC governor said authorities can contain the risk. Just take a listen to what he had to say.
I think overall we can contain the Evergrande risk. And first, we try to prevent the contagion from Evergrande to other real estate companies. Second, we try to contain the risk for financial sector.
So, Enda, what would containment from the PBOC actually look like?
Well, obviously, you know, the first role of a policymaker like Yi Gang is to talk up confidence. And of course, he wants to make clear that they're able to contain the risks. There is, of course, a view among many that this isn't the systemic problem that some make it out to be. We've had this ongoing debate over Evergrande versus Lehman, for example. But nonetheless, there are those who say, hang on a sec, Evergrande goes to the core of China's real economy, which is real estate. As I mentioned to you, 25% of GDP comes from that sector. There is contagion going on to other property developers in that sector. We are seeing that impact in their asset prices, for example. So this issue will continue, I think, in the near term.
Yeah, absolutely. Enda, thanks very much for giving us a roundup. Enda Curran there, Bloomberg's chief Asia economics correspondent. Now, global ports are growing more gridlocked as supply shocks intensify. This threatens to spoil the holiday shopping season, as I'm sure you already know, also eroding corporate profits, driving up consumer prices. It's really at the crux of the issues that we watch. Now, medical equipment supplier Philips lowered its growth and earnings guidance after supply chain disruptions weighed on sales in the third quarter as well.
It's really a matter of both chips and ships. We have a shortage of e-components, and we see the delays in the shipping industry and the congestions in the ports that probably intensified during the quarter. We saw the biggest impact in September, and that set us back at least 150 million in the quarter.
All right, so he's coined a phrase. I don't know if he got that from somebody else, but chips and ships is the problem right now. Bloomberg's Danny Berger here to report with some exclusive Bloomberg data. Danny?
Yeah, Matt. Oh, you know we love some exclusive Bloomberg data. And the data we have is that 107 ships are now congested off the ports of Hong Kong and Shenzhen. Now, the reason this is significant is because we've already heard companies like Philips CEO talking there facing these supply chain issues, be it chips or ships. So the congestion was already a problem. But in Asia, it wasn't as bad as, say, Los Angeles, for example. But there was a typhoon in Asia. So those ports seeing more congestion now really just shows how fragile the current situation is. So RBC figures that 77% of ports are now seeing delayed times. So if you're Philips, for example, when Manus Cranny and I this morning spoke to the CEO there, Frans van Houten, he said that, look, our order books are really strong. He kept saying this over and over again. The demand is there. The reason that they've had to downgrade their forecast, the reason that Umicore, for example, a European metals company, downgraded their forecast is in large part because of these shortages and delays at the port. So Bloomberg data showing us just how much worse this current situation is getting.
Yeah, absolutely, Danny. Map Go, the function you can identify all kinds of freight traffic waiting to get into those ports internationally, all over the world. Let's move from the issues around supply chain, because clearly that taps into our inflation fears, because this is driving inflation in many areas. There is a fierce debate around the dangers of inflation and how central banks should respond, of course. Bank of England Governor Andrew Bailey says this will need action. Let's listen.
But the energy story particularly means that it will last longer. And it will, of course, get into the annual numbers for longer as a consequence of that. And that raises, of course, for central banks, the fear and concern of embedded expectations. And that's why we at the Bank of England have signalled, and this is another such signal, that we will have to act. But, of course, that action comes in our monetary policy meetings.
Danny, so why we have signalled and why this is another signal that we will have to act. I mean, monetary policy guidance doesn't get much clearer than that, does it?
Yeah, he's being very exact, saying we are going to have to act. And I think it's very fascinating, Anna. He also says, back to our conversation just a second ago, that monetary policy, it can't fix these supply chain issues, but they have a pricing credibility issue on their hands. So Bank of England might be the first, but all of this action means that the belly of the curve globally is seeing this very high rise in yield. So for our radio listeners, I'm looking at US, UK, Australia, and New Zealand 5-year yields. And you can see that UK has been shooting ever higher in terms of percentage moves. So it is this part of the curve that is looking at a potential regime in rate changes. This is something Bank of America analysts saying that if 2020 is shock of growth with that V-shaped recovery, 2021 is the shock of inflation, 2022 will be a shock of rate changes. And if we get a shock of tighter policy, be it the UK, be it the US, or emerging market banks, central banks rather, that means that there's going to be more volatility in these markets. You want to sell the rips in equities, credit, and even crypto. So it's these warnings of volatility that we're starting to hear surrounding this potential regime shift in rates.
All right, really fascinating stuff, Danny. Thanks very much for that. Danny Berger talking to us about growth being the 2020 story, inflation being the story this year, and maybe rate changes being the story next year. Let's get to Washington now. A key legislation to fight climate change, and the Democrat spending package may not get the final swing vote out of West Virginia to survive. Senator Joe Manchin told the White House that he will not support it due to, quote, concerns about using taxpayer dollars to pay private companies to do things they're already doing. That, according to his spokesperson. Anne-Marie Horton joins us, our Bloomberg Washington correspondent from the D.C. Bureau. So, Anne-Marie, what do we know about Joe Manchin?
Well, Matt, I'm not exactly surprised. He comes from West Virginia. This is coal, this is gas country. And basically, what this program outlines, it's worth $150 billion, is the government would pay these companies, these utilities, to switch from oil, gas, and coal to start using things like solar, wind, nuclear. And if they didn't, they'd start to penalize them. Now, first, this is a huge issue in terms of the president's economic agenda, his climate agenda at home. He wants to halve emissions by the end of the decade. He needs this. He needs to do this to decarbonize the grid. But second, on the international front, the president, along with a number of others like former President Barack Obama, Special Envoy for Climate John Kerry, they're all going to be in Glasgow in about 2 weeks' time. And if they don't have any of these things lined up, they are pretty much going into that meeting looking very empty-handed. At the same time, they're trying to get the likes of China and India on board to go even more ambitious and further cutting their own emissions as well. So this is very much a two-pronged issue for the president right now.
Beating the drum to COP26. Thank you so much to Bloomberg's Anne-Marie Horton in Washington. Let's get back to the markets now and take a look at some stocks moving in pre-market trading here in the U.S. And one mover to the downside is Zillow. And this is after Bloomberg broke the news over the weekend that it's going to take a break from its home buying and flipping operations. As a result, that stock is down about 6%. Another mover to the downside is Virgin Galactic, of course, Richard Branson's space exploration company. It said last week it's not beginning commercial space flights until the fourth quarter of 2022. The shares fell 16% on that on Friday, and once again, they're lower by the better part of 3% in pre-market trading on this Monday morning. And finally, one mover to the upside is Dynavax. It is a supplier to Valneva for its COVID-19 vaccine candidate that in a study showed actually it was more effective than AstraZeneca's vaccine. So as a result, Dynavax is moving to the upside by the better part of 9% in early hours, Anna.